All right, so we can see that this has 4 order sets, right? So each of these rectangular areas are called order sets, right? Because it is a set. So, right, you have an entry order, right? So this one is a market entry order. And then over here we can see we have a stop entry, another stop entry, and a 4th stop entry here. And then we also have the profit target and the stop loss, right? So this is a complete order set, right? So once your entry order is filled, then you have the profit target and stop loss, which are submitted with that entry order. So that's why these are all called an order set here. Okay, so that's just some basics here. So this question gets into the technical capabilities of BlackBird. So I am going to try and take some time to explain this. So this first order set, right, order set A here, we can see that it's a market entry. And if we open this up, right, so we all know that market orders get filled instantly there, right? And also I want you guys to pay attention here that the place after says place immediately, right? So the place after is not used in this case. So that's order set A, right? So this is going to get submitted to the market immediately. Now, order C, E, and G, those are different. So if we open up the entry order, we can see it's a stop entry, but more importantly, it is using the place after, right? And so what Thomas has set up here is that this stop entry, it will get submitted after the entry order for A is the stop loss, right? So I'm sorry, not the entry order. Sorry, the naming here is a little, has been different. So, but the order set entry A, right? We can see up here, this has some custom naming here. So he called this entry A, entry C, entry B, entry G here. So let's just call this order set A for short. So for order set A, when that stop loss, right? So obviously a stop loss is not an entry order. So we'll just call it order set A. So the stop loss, when that stop loss is filled, right? So if we look at this, so he's using this trigger called order status changed. And so what order status change does is it will monitor when one of the other orders, in your big list of orders, if one of them changes, and so in this case, he's looking to see when that stop loss is filled, right? So you can check to see whether the stop loss is filled or gets canceled, right? I mean, that's all you can do with an order. Either your order gets filled or it gets canceled, right? Those are the only two, statuses, statuses that an order can change, right? So to summarize, right, order C, this entry order is submitted to the market when the stop loss for A is filled, right? So in other words, if the market hits that stop loss, right, the market's going to fill that stop loss, and then order C is then submitted to the market, right? So that's what this place after does, is it adds a secondary kind of condition that needs to happen before order set C is submitted to the market. So think of this place after as kind of adding a secondary delay to this order set. And the same thing for order E and G. These also have a place after here as well. Yeah, let's see here. So this place after, order status changed. Right, so we can see here that for order E, the entry order for order set E, it is waiting for the stop loss of order C to be filled, right? So order C over here, if this stop loss is hit, then order E is then placed to the market, right? Submitted to the market. And order G here, let's take another look here. Yeah, so for order G, again, the same thing. We can see that if the stop loss for E, so when the stop loss for E is filled, then the entry order for G, right? So we can see that these are all kind of daisy chained, right? So if the stop loss for A is hit, then the entry order for C is submitted. And then if C is filled, if the entry order is filled for C, then if the stop loss is hit, then the entry order for E is submitted to the market. And then if the stop loss for order E is filled, then the entry order for G is submitted to the market, right? So they're all daisy chained. Now, so now you kind of understand what's going on here. So that's an understanding of the steps involved here, right? The order processing here. Now the question comes down to the cancel after, right? So so the reason why there's a cancel is because if you're going to use this place after option here, so for example, let's go back to order G, right? Order G, it has a place after, and it's waiting for the stop loss for order E to be filled before entry order G is placed to the market, right? Well, so order G could be waiting forever, right? There's no guarantee that your stop loss for E will ever get filled. Because what happens if order E, what if the entry order never gets placed? Well, then, of course, the stop loss will never get placed. And so what happens to order G? Well, it's just going to sit there waiting forever and ever and ever because order E, never places its stop loss, or order E never gets filled. So, so in those cases where you could create a situation, right, where your entry order is just waiting forever, well, you need a way to cancel that entry order. And so that's what the cancel after is for, is it gives you a way to say, okay, after so much time, just cancel the entry order for E, right? And so this is this is getting into really what the question is here, right? So we can see that order C has a cancel after, and order E uses the cancel after, and of course order G uses the cancel after. Now if we look at order A, because it's a market order, the cancel after is actually disabled, right? Because you can't cancel a market order, right? It gets filled instantly, so you can't cancel that order. Right. Now, if we do add a delay mechanism here, let's just add a simple 5-bar delay. So if there is a delay mechanism, so right now we're just waiting for 5 bars to go by, and then this market order will get submitted to the market. So now we can actually cancel that. So you could create a cancel condition here that has the opportunity to cancel this market order before it gets submitted, right, to the market. So, but as long as there is no Yeah, let's see here. Let's put this back on none. There we go. So if there is no place after, then you can't cancel a market entry, right? Now, if this was a limit order, well, a limit order is not guaranteed to be filled, right? A limit order could sit there for a very long time until the market comes down to fill that limit entry order. And so a limit entry, because that order can sit there in the market for a long time, well, now you can set up a cancel, right? That should make sense. If an order can sit there, then being able to cancel it, right, makes sense. But of course, you can't cancel a market order because it never sits there waiting to get filled. It gets filled instantly. So the cancel after is just kind of disabled there, unless you're using the place after. Yeah, so now let's get back to order C. So we can see that we have some cancel afters here created. And the one, let's see here. Yeah, let's kind of go into a little further explanation here, right? So to kind of summarize again here, right? Order C, its place after is waiting for the stop loss of A to get filled, right? So the entry order for C only gets placed to the market or submitted to the market when our stop loss for A is filled. So now we have a cancel after, right? What happens if our stop loss doesn't get filled? Well, if we look at the cancel, right, we have a order status changed. And so if the profit target for A is filled, well, then that is to cancel the entry order for C, right? If our profit target's hit, well, then the entry order for C is to be canceled. Also, if we look at this, right, we can see that there's two of these order status changed triggers here, right? There's two of these triggers here. So we can also see that, actually this says market entry. Yeah, this is actually, yeah, so just a little mental note here. This order status change here, it says for A, if the market entry is canceled, however, you can't cancel a market entry. It gets filled instantly. So just a little mental note there that using the cancellation of the market entry, this is never going to happen. So really, this trigger here is not doing anything. It's kind of a wasted trigger here, right? It's never going to ever do its function because you can't. A market entry order can't get canceled there, unless it could if it had a place after. Well, actually, no. Sorry, yeah, there is a technical difference. So if the place after is used for that market entry still can't be canceled because it's not a live order. So keep in mind that for this order status changed, that this cancellation does mean that the order has to be submitted to the market and then get canceled, right? So yeah, so you can't actually cancel a market entry order here. So anyways, all right. So yeah, so we've established that the entry order for C, it will get canceled if the profit target for A gets filled, right? That makes sense. Now, what's in question here is this other rule here, which is, let's see here, yeah, which is this profit or loss, right? So if there is a loss of 4 ATRs, right? So if the market, moves against the trade, and generates a loss of 4 ATRs, then that's another trigger condition here, or another rule that will cancel the entry order for C. But again, if you think about this logically, let's see here. Initial placement. Let's see here. Where is it? Okay. Yeah. So this stop entry is placed at the closing price of the most recent bar, right? So wherever the last bar closed at, that's where this stop entry will be placed. So yeah, so this stop entry gets placed at the closing price when that stop loss is filled, right? So we don't know when this stop loss or where the stop loss is going to get filled, but we can see that the stop loss is a 2 ATR stop loss. So this entry order, is approximately going to get placed 2 ATRs away from, this entry order C is going to get placed approximately where the stop loss is filled, right? And so it's actually going to be at the closing price. So so the most recent bar closing price, candlestick closing price, wherever that closing price is, when the stop loss gets filled, that's when the stop entry gets submitted to the market. So again, this stop loss here is about a 2 ATR. So if we look at this profit or loss, we can see that it's set up for a loss of 4 ATR. So if we look down here, it says 4 ATRs, right? So basically this entry order will get canceled if the market moves way past that stop loss. So, it depends on what chart type you're trading on. So if the chart that you're trading on has really long bars, then there is a chance that this entry order could be really far away from this stop loss. So this entry order may not get picked up, especially since it's a stop entry. But so in any case, so the question is, so about this profit or loss, order C is really not a good place to focus on this question, because most likely order C will get filled, right? The entry order for C is probably going to get picked up. So, but really the two orders in question are order E and G. And so let's look at the cancel for order E and G. And let's just, right, so we can see there's a bunch of order stats changed here, but let's just kind of get to the question, which is the profit or loss. So again, the entry order for E, again, has it's looking for a loss of 4 ATRs. So if the market, basically if the market hits this stop loss, which is at a 2 ATR, and keeps on going twice the distance, then this cancel after, is looking for a loss of 4 ATRs. And so that is what is supposed to cancel E. And also the entry order for G. Oops, sorry, wrong one. Yeah, so if we look at the entry order for G here, and again, right, it has a profit or loss, and it's looking for a loss of 4 ATRs as well, right? So we can see that G and E, right, the entry orders they're both supposed to be canceled if the market goes against this trade and makes a loss of 4 ATRs, right? So basically that's twice the distance of the stop loss here for order A, order set A. And so the question is, why is the profit or loss not canceling order E and G? All right, so let's take a look at this. All right, so we had a very, very lengthy theoretical discussion of what's going on here, but seeing obviously is believing, and seeing makes things a lot easier to understand, right? Obviously, trading is a very visual, activity. Yeah, it's a very visual activity, right? So what I have done is I have opened up the order monitor panel here. And so we can see all 4 order sets, right? Entry A, entry C, entry E, and entry G there, right? So it allows us to see, what is the status of each of these orders here. So with that open, let's see here. I do have my simulated data feed here going here. So let's take a long trade. So let's place the long trade here. So there we go, right? So order A. So if we look over here on our order monitor panel, right? Entry A, we can see our entry order was filled, our profit target is working, and our stop loss is accepted, right? So that's what we see on the chart, right? Our profit target and our stop loss. Now, if we look at C, it's in a pending state, right? Because that place after, right? So that's what happens when, right? So when you use the place after for your entry order, right? It's going to place that entry order in a pending state, right? Because BlackBird is waiting for this place after condition to occur before this entry order is actually placed in the market, right? Submitted to the market. All right, so we can see that C, E, and G, all of those entry orders are in a pending state, right? They're waiting. They're all 3 orders are waiting for this place after condition to happen. And once they do, that is when BlackBird will then submit the entry order for each of these order sets. So let's pull the market down and fill the stop loss for A, right? The stop loss for A. Because if you remember, the entry order for C, the place after is waiting for this stop loss to get filled, right? Stop loss A needs to get filled, and then entry order C will get submitted. All right, so I just pulled the market down just kind of slowly. So we don't want to rush things. It gives me a chance to kind of discuss what's going on here. And all right, so now, so we have, right, so there is our entry order for C. And let me neutralize the trend. All right, there's our entry order for C. And here, let's draw a line. Let's see, yeah. So this line is where order A was filled. All right, so the market entry order was filled right there. And then we'll also just draw a little short line. And that was our stop loss right there. There we go. So what's happening here is if we look at our info panel, right, we can see that we actually don't have a position open anymore. And we can also see on the chart, right, there is no position open, right? We do have an entry order waiting to get filled, but we're flat, right? If we look at the account, so if we look at our sim account, we can see that there's no unrealized profit or loss. And if we look at our positions, right? So if we go to the position tab, we can see there is no open position here for the NQ. So this is an NQ chart, right? So BlackBird is flat right now, right? So that really gets to the problem here that Thomas is having, which is right now BlackBird is flat. So let's go back to our order sets here. Actually, what? Hold on. Let me keep moving the market down here a little bit. All right. And then, let me remind everybody here that entry order C, E, and G, right? If we look at these cancel after conditions, if you remember the profit or loss, it was set up to detect a loss of 4 ATRs, right? 4 ATRs. So that should be somewhere down here. However, right? So that's the problem here, is that once the market gets down here to 4 ATRs of loss, we can see that entry order C is not being canceled, right? And also, right, so if we look at our order monitor, right, entry order C, right, it's accepted, so it's basically in a working state. Order E is still pending, and order G is still pending, right? But if we look at order E and look at the cancel after, and we can see in the cancel after there, right, for order E, there's also a profit or loss, and it's set to look for a loss of 4 ATRs. So with the market way down here, so we know that the stop loss was at 2 ATRs, and so the market is way down here at about 5 or 6 ATRs of loss. So why aren't these orders being canceled, right? Why isn't C canceled, and why isn't E and G in their pending state? Why aren't they being canceled? Well, so that really is what the question is here for today, which is, if you're using the cancel after and you're looking for and you're using the profit or loss, to say if the market goes, too far against the trade, that we want to cancel all of our entry orders. So why aren't they being canceled? Well, it's because the profit or loss trigger condition is being used, and there is no loss, right? You only have a loss or a profit when you have a position open. But BlackBird is flat. There is no position open. That's an entry order, but that's not an open position, right? So, So when you kind of create complex, order situations here, complex kind of order management, you have to keep in mind, do I have a position open so to where there actually is a profit or loss that can be calculated, or is the position flat? And so right now the position is flat, and so there is no loss, right? As soon as the let's go here, right? As soon as the stop loss for order A, as soon as that stop loss was filled, right, BlackBird was in a flat position. There was no, basically the loss was cut off at 2 ATRs, right? So that loss was taken, and so now there's no more loss happening because your account is flat. So all of these entry orders here using this cancel after and looking for a loss of 4 ATRs, well, that loss of 4 ATRs is never going to happen, right? Because BlackBird is flat right now. So the solution to this is instead of using a profit or loss, you have to use the delay trigger, right? And in the delay, unfortunately, there's no ATR setting here with the delay. But what you can do is with the delay is you can monitor ticks of movement in a profitable direction or in a loss direction or in both directions. So there's ticks of movement, there's points of movement, there's currency. So you can look for $100 of profit or $100 of loss, right? So there's currency. So yeah, so right now, as BlackBird stands, there's your units of measurement is ticks, points, or currency. So Thomas, what you'll have to do is kind of switch over to using either ticks or points and monitor X number of ticks of loss or points of loss. And once we do that, so let's see here. So I could do a quick calculation here. Actually, well, let me neutralize my trend first. There we go. Right. So I am on a 4-range chart. Right. So one ATR on a range chart is basically the length of the bar, right? So ATRs never really fluctuate on range charts. They do, but it's so minor. It's less than a tick. So effectively speaking, a 1 ATR unit of measurement on a 4-range chart is 4 ticks, right? The length of a bar. So I can easily kind of convert this over here. So if I go into C, so I'm going to, so what you want to do is, we'll have to get rid of this profit or loss trigger condition. And we'll have to switch over to using the delay. And since, let's see, since a 4-range bar is 1 point on the ES, what I can do is I can say, let's look for points of movement in a loss direction, and then I can just knock this down to 4 points of movement, right? So on this 4-range chart, that's basically 4 ATRs, right? And again, so the delay looks for movement regardless of whether there's a profit or loss. So the delay doesn't actually look at unrealized profit or unrealized loss, right? So the profit or loss trigger requires there to be an open position in order to calculate a profit or loss. There has to be an open position. So the delay is just a delay mechanism here, and that's not actually looking for an unrealized profit or loss. So when we see this ticks of movement in a profitable direction or a loss direction, that is just BlackBird internally monitoring whether the market moved, with the trade or against the trade, so to speak here. So, so all right, so we have order C set to monitor 4 points of movement in a loss direction. And so let's do the same thing for E here. Let's go into E. And here's our delay. I never did finish setting it up. So let's set it to points of movement in a loss direction, and we'll set it to 4 points of movement. And then let's go into G and make adjustments to G here. So, all right, profit or loss, let's delete that. And we're going to add the delay trigger. And we'll enable the movement option here, set it to points of movement in a lost direction, and then knock this down to 4 points as well. All right, so there we go. So a real easy little adjustment made right there. And so let's click OK, and let's cancel this existing position here. All right, so we can see our order monitor panel here, right? Everything's cleared out. And so now let's take a short trade and we'll move the market up, right? So let's we'll move our little line down there. There we go. So there's that. Let's put this on our stop loss. There we go. So I'm just kind of eyeballing it here. And so somewhere up here, it looks like it's so if this is 2 ATRs, which should be about 2 points, should be about 2 points there. So once the market gets to about up here, well, actually we can figure this out. Let's see here. So it should be 57.75. There we go, right about there. And there we go. The market, right? The market got up here, and I didn't have enough time here, but we can see that entry C was canceled, right? We saw the order flag disappear on us, and also E and G were canceled as well. We can see that the pending state was removed. All right, there we go. So now everything's working when BlackBird is in a flat position. All right. So actually, let me cancel that. And let me pull up the documentation here, guys. And so if we go to support, and then I can open up the documentation page on another tab. And then if I click on BlackBird, and then on the side menu here, if I go to order sets, right down here is order sets under the BlackBird menu. If I go to order sets, right, here you go. So this is gonna, this is the documentation page on the order sets part of the menu here. So if we scroll down, right, so there's an explanation of the options tab, right, the options tab, right, if we click on this, right, there's the little menu here for the options tab. And if we keep going down, and what I wanted to take you to are the trigger, right? So if I click on this menu here, right, the triggers, right, so that delay mechanism and also the profit or loss, right, those are called trigger conditions, triggering conditions, right? So, when you're waiting for X amount of loss, to trigger something to happen, right? That's why these are called triggers, because you're looking for these conditions, and these conditions will trigger something, right? And so we use the delay trigger so that when there is X amount of market movement, in a lost direction, that was to trigger canceling the entry orders. So that's why all these conditions are called triggers here. And if we open up the type, there's a brief explanation of each of these triggers here, right? So there's the delay, the profit or loss. And again, this is just a quick summary of it on the trigger. And so if you notice, it says trigger, and then there's a number 1 here, right? Action has number 2, repeat has number 3. If we keep scrolling down, here we go, trigger conditions number 1. So this section, as you can see, there's a lot more information here. So this section down here gives you the full explanation of, what does a delay trigger do, right? And so we were using the ticks and points of movement, right? It's ticks and points of movement here, right? And so here's an explanation of that. So, right, so we can see there's ticks, points, and currency, right? And then there's movement in a profitable direction, movement in a loss direction, right? So, right. So there's a full kind of explanation of what the delay is, and then you can kind of compare that to the profit or loss there. All right, guys, so I just wanted to remind you that that this documentation is here for you guys.